Financial, treasury and forex management is the most threatening subject for CS students. The entire paper is divided into 7 questions carrying 20 marks each, and the students are required to attempt 5 questions, among which question number 1 is compulsory. Question number 1 is not of objective type but is a comment based question. Various statements will be given from all the chapters put together. Each and every statement, whether correct or not, the student has to justify with the explanation, and such comment and the justification carries 5 marks. So question number 1 is for 20 marks. And one more question which asks for distinguish, then one short note question, the balance is practical. There is a notion among the students that financial management is a practical paper and it is very difficult to answer, but not the case. First of all, if you take a balance sheet, in the balance sheet, the asset side can be divided into 2, fixed assets, current assets. The liability side can be divided into long-term liabilities and current liabilities. Decisions related to long-term liabilities is known as financing decisions. Decisions related to fixed assets is known as investment decisions. And the decisions with respect to managing the current assets and current liabilities is known as working capital management decisions. As and when the financing decisions are taken, the outcome is an obligation. The company will have an obligation. Whereas, while taking investment decisions, the outcome will be a return. We call that return as EBIT. The net, that is EBIT minus the obligation, that is the cost, is earnings available to equity shareholders. Out of this earnings, that portion of earnings distributed to equity shareholders is known as dividend, and the balance is known as retained earnings, which will go as reserves and surplus in the balance sheet. Decision regarding how much to be declared as dividend and how much to be retained is known as dividend decisions. These 4 decisions, that is financing decision, investment decision, dividend decision and working capital management decisions, are traditional financial management decisions. First of all, financial management means the process of taking decisions in order to maximize the share value. Here, while taking 4 decisions, the finance manager should take care that the value is enhanced. This is traditional financial management decisions, and now the modern financial management decisions include Forex management, because the transactions now, because of the LPG, liberalization, privatization and globalization, there may be many foreign currency transactions, because of which the Forex management, foreign exchange management is required. Then the finance manager sometimes, in order to maintain the sufficient cash balance, will invest into the shares marketable securities. Now security analysis and portfolio management plays a major role. And as and when the amount is invested into the securities, proper hedging should be taken care in order to reduce the risk with respect to investment in the securities. For that, there are some financial instruments, we call it as derivatives. So this is the complete outlook of financial, treasury and forex management. Coming to the first topic, financing decisions, we will discuss all the chapters from 4 angles. Number 1, the objective for the chapter. Number 2, inputs required in order to carry out the objective, tools or techniques that are used, and lastly the conclusion. Taking first financing decisions, the objective is to select a financing alternative, because the financial manager will be flooded with various alternatives.